Welcome to Tearsheet's newest podcast, Compound Influence, which is all about the power of influencers in financial services. I'm your co-host, Tearsheet editor Zack Miller, and joining me is my co-host, Josh Liggett.
What's up, Zack? Great to be back in the Tearsheet studio. Been a while, but happy to be here.
I've missed you, man. I have not necessarily missed talking about neobanking, but Josh, when you and I were thinking about what next podcast we wanted to do, it became clear relatively quickly that we wanted to focus on influencers, huh?
Yeah, I think what's really changed in the past couple of years has been the power of influencers, especially with somebody being able to take a very strong profession that they have or a very strong platform that they have and being able to turn that into like a conglomerate, almost like a mecca, being able to do all sorts of different things. And this is really what's been happening the last couple of years is a lot of influencers are now making their way in a very strong way into the financial world, specifically into the private markets, private investing. That's been something that's very strong, but there has been nibblings, let's call it, in the beginnings of influencers getting into traditional financial services, as well as financial service companies trying to figure out how they can yield more influence in the world at large.
That's a great way to explain it. And I think part of what's behind our intention in creating this podcast is to figure out how the mechanics work of that, how the influencers themselves have built their platforms, how they amplify messages, and how third parties who want to partner with them or build their own influence platforms can figure this stuff out by almost like case studies, right?
Yeah, absolutely. It's something that you have to be doing nowadays, especially if you're talking about B2C. The power of influencers, especially when you're talking about upstreaming, trying to onboard B2C clients when they're born or as close to that
Right.
moment as possible.
Cradle to grave marketing and finance. Yeah.
Yeah, having something like that. Now, obviously, traditional B2B, B2C relationships, which is the sort of the boys club that people like to talk about, that one-on-one private time, country club, golf outings, whiskey tasting, cigar smoking, listen, that's not going away. We all know that's not going away. But there is something that's happening with the world at large, trying to reach a wider audience and and trying to get scale, and a lot of that comes with a marketing campaign around influencers or a platform or product that in itself yields a ton of influence.
And I have a great example, a personal example of the power of influence that I've witnessed firsthand in my life. We were interviewing the CEO of Current, a neobank, who was working with Mr. Beast. Obviously the most powerful, arguably, maybe, definitely the most powerful.
I mean, in
influencer.
terms of like sheer volume, I think he turned down a deal offer for $10 billion for his YouTube channels. I mean, it's pretty.
Wild.
And people said, yeah, that's a lowball offer. Like, we get it. It's pretty
So
crazy, his influence.
So Current, this neobank, had a deal with them a few years ago, and he was helping to promote it. Now I live overseas, and my son was 15 years old at the time, and I was excited to tell him about this podcast because in the podcast it mentioned Mr. Beast, and I know he was a fan of Mr. Beast. And just as I was about to tell him the story, I couldn't even finish. He's like, "Oh yeah, that's Current, the neobank," and so he had instant brand recall. 15-year-old living overseas knew exactly the product because Mr. Beast had promoted it because he was wearing a hat with the logo on it. I mean, to me, that was like so wild, like that it's so powerful that it can reach people across the seas without even like any targeting. It was just like he knew, and he'll know that company forever now.
Yeah, it's something that's incredibly powerful, and that's something that I think everyone has to at least have the pulse on or a strategy around how they're going to be working with influencers or tackling, that the potential to expand market share like that.
Exactly. And so this is a trend that both you and I see will continue to grow. And so when we thought about who to cover in the first episode, it became pretty clear, like, we're going to start with the OG. Now, I call him the original gangster. Who do you call him, Josh?
I call him the original guru. He's like the
Guru.
stock guru, the original stock guru.
I like
And
that.
then that's Jim Cramer.
None other than Jim Cramer. And I think we'll talk a little bit more about Jim Cramer. But Josh, I think you have a clip that sort of embodies the raw sheer power that is Jim Cramer.
I mean, I think that's a good a good expression of what that is. I'll
Now,
cue up
as
the
you're
clip
getting
right
that, this
now.
is 2008. Bear Stearns is on the precipice of declaring bankruptcy, and Jim Cramer is having the rant of all rants. This is on CNBC Live.
Well, this is about Bernanke. This is about Bernanke. He has to be on that call. Forget the investors. The investors are going to do. If Bernanke listens, Bernanke needs to open the discount window. That's how bad things are out there. Bernanke needs to focus on this. Alan Greenspan told everyone to take a teaser rate and then raise the rate 17 times. And Bernanke is being an academic. It is no time to be an academic. It is time to get on the Bear Stearns call. Listen, open the darn Fed window. He has no idea how bad it is out there. He has no idea. He has no idea.
Cramer.
I have talked to the heads of almost every single one of these firms in the last 72 hours, and he has no idea what it's like out there. None! And Bill Poole has no idea what it's like out there. My people have been in this game for 25 years, and they are losing their jobs, and these firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
Cramer.
I know you love that second Cramer.
I do.
Cramer.
I love that set. The first Cramer that he rolled right through, and then the second Cramer of like
Exactly. It stopped
Cramer.
him. Now, you just get the sheer power that this guy is in the trenches with everybody, right? Like, he's on national cable TV. He's got his sleeves rolled up. He's done some coke probably, and he's pleading his case for the American people, his people. He really sees it, his people. That's one of the things I take away from this.
Jim Cramer, as someone who grew up in the 80s and 90s, Jim Cramer to me is the embodiment of the last 15 minutes of Trading Places in real life, where guys are making millions of dollars, the other guy is getting pushed. Duke and Duke's trainer is getting pushed out on the top because he's going crazy. Duke and Duke are about to go bankrupt with a margin call. His like passion and the feeling of my whole life is on this trade, on this moment, on this minute. I'm up $1 million, I'm down $1 million, depending on the minute, what time is it? That's how you get, that's the vibe that Jim Cramer gives. And that vibe and that feeling resonated with people and continues to resonate with people for over a decade. And it's really incredible what he's been able to build using that passion.
Decade? We're talking like 20 years.
Yeah, in terms of social media, yeah, more than a decade.
So I want to share a story that my first job in finance was as an analyst at on the buy side at a hedge fund. And we had this sort of ceremony when the job offer was extended to me. You did a little l'chaim with the owner of the firm. And after we did the l'chaim, he hands me a gift. He says, your first assignment is to read this book. I look down at the book, and it's like Confessions of a Street Addict, I think was the name, which is a great name, by the way. Jim Cramer's book, autobiography. And he says, read this, learn this, understand this, but never do this. And I was like, that's exactly what Jim Cramer is. He's financial entertainment. He took this sort of back office, old boys club, as you were describing, Josh, this insider group that has like information and is studying the markets, and he's kind of opened that up and made that accessible for everybody.
And that's what Jim Cramer is. If you've done any stock trading, you probably know who Jim Cramer is. Like it's hard to go like an adult, who has any sort of portfolio. They've probably come across Jim Cramer. Again, that is the reason why we chose to start with Jim Cramer as the first influencer, because people may not know who Jamie Dimon is. People may not know who the CEOs of BlackRock or Blackstone or they might not know who the CEO of this company or that company is, or that these giants that yield billions of dollars. But everyone knows who Jim Cramer is.
Right.
Like that's what it just he's been able to stick. And the thing with Jim Cramer is that he has that divisiveness that you really want with an influencer. A lot of people love Jim Cramer. A lot of people do not love Jim Cramer and would literally do the opposite of Jim Cramer, which we'll talk about later. The memes that you see online of people who just want to do the opposite of Jim Cramer. I was, checking out my Twitter feed today, and the famous Jordan Belfort, "Sell me this pen," was a meme. It was like Jordan Belfort saying, "Sell me this pen," and the next meme was Jim Cramer's bearish on it. I thought that was a great meme. But the fact that is a meme and people get it shows like how much of an impact he's had on the world at large, and specifically
he
the
forces
finance
you
world.
to take a side. He does.
Yes.
And I think what's interesting is also he takes sides. And I think in a world that is, people kind of, influential people have to kind of walk a tightrope between being too outspoken or not outspoken enough. Like Jim definitely doesn't walk that tightrope. He'll be on one side and then the day after be on the other side of the same trade.
That's a trader, and that's what you get with him, and that's what a lot of people feel. Like a lot of my, I talked to my dad, I talked to their friends. People like go back and forth, and that's fine. And seeing that play out in real life is really fascinating. Not just that, but everyone knows Mad Money. That's where he really made his bones. But he also, he made his bones before that, which you'll talk about later. But in terms of influencer, that everyone thinks of Mad Money, but he's also used social media very, very well. And done a good job over time.
How does he use social media?
Yeah, so this is a little segment I like to call, by the numbers. I think it's a work in progress on the title. But I think what's really important to us is to understand each influencer and what social media platforms they're using and how they're using it. So Jim Cramer started using, he's mainly on Twitter. That's his main platform. Twitter launched around 2007, 2006, in sort of that time period. Jim Cramer joined Twitter in 2008. He's been around for a long time.
Early adopter.
Yeah, and I think you could talk about this in a minute, but Twitter does fit the Jim Cramer persona, which but just to talk about the sheer numbers and what he's done on Twitter. So, looking at other financial influencers, Jordan Belfort, who I mentioned before, very influential in terms of the financial world, especially after the movie Wolf of Wall Street came out. 630,000 followers, around 10,000 posts, again, since September 2008. Kevin O'Leary from Shark Tank, again, another pretty well-known influencer in the financial world, around 1 million followers on Twitter with 13,000 posts since 2009. Bill Ackman, I know you're a big fan of Bill Ackman. He's got about 1.3 million followers with around 6,000 posts. Dave Ramsey, who's sort of, I'd say, maybe Jim Cramer 2.0 to a certain extent, which we'll talk about a little bit later, has around 1 million followers as well. Jim Cramer has 2.1 million Twitter followers, which is a very solid number, bigger than all those other names. But since 2008, he has posted 126,000 posts. It's not even close.
The keys must have worn off on his computer or on his phone.
Yeah, his computer or his phone, like that app. I mean, Elon Musk must love Jim Cramer in terms of content. He is just flying content out, and for a cokehead trader, that's probably perfect.
I really like that, and I like the fact that you've said that he kind of grew up with Twitter, and I think that's, in a way, he's kind of demonstrated the power of short form messaging, which is that trader. It's almost like you're getting a feed. It really is a feed. It's his stream of consciousness throughout the day as he's looking through the market. So you're getting this feed where you can actually kind of step into Jim Cramer's shoes to see how he's looking at everything. And it's very confusing in his shoes because there's contradictory information, there's lots of action, there's squirrels there, and you're really feeling that.
You're definitely feeling that, but taking a step back from that this is how you build a really awesome following. Is you find the platform that fits you really, really well, and you just beat the hell out of it and use it to its extent, which I know we're going to talk about in terms of takeaways. That's something to talk about, and also something in the takeaways as well is what Jim Cramer has not been able to do in terms of evolving himself into other platforms.
How does Jim Cramer's influence on Twitter, say, compared to I guess somebody I think of as one of the most influential people in finance, like a Warren Buffett?
So Warren Buffett, that is funny. Warren Buffett has also 1.7 million followers, 10 posts, 10. So I think the last one's from 2018, announcing an event to go to Omaha to go to the investor.
Yeah.
Pre-COVID, I'm pretty sure, the investor event that he has.
So
it just shows that Warren Buffett
didn't build his following on Twitter.
Yeah, I don't think Warren Buffett really, Warren Buffett probably is at the lunches that he has, has more than 10 posts worth of, the auctions off the charity. I mean, but that just shows that Warren Buffett, also an incredibly influential person in the market, does not go social media, sort of hangs back a little bit, keeps to himself a little bit. That's a strategy. It works when you're able to deliver the returns that, Warren Buffett's been able to do over the years, but not everyone necessarily wants to go with that strategy. But it's very fascinating with the 10 posts, which is pretty funny.
That's a great follower per post ratio. So, I don't want to beat around the bush. What if you say, Josh, we move into sort of the takeaways, the most important things that you and I have found in Jim Cramer, the ability he's had, the good, like as you said, the positive things and negative things, what we can learn from him to bring back to our own businesses, our own influencers, our own relationships with influencers, and how we think about building businesses into the future. What do you say we start with that?
Yeah, let's do it.
I think you should start. So one of the things that you mentioned was Twitter and how important that was into Jim Cramer. Can you say more about that?
Yeah, so it's really important to find the platform, to start with a platform that fits you. And this is something that's very difficult. I know that when I've done work with other companies or, been working at companies themselves and we've been working on social media, it's not easy because certain people, want to do LinkedIn and be very professional, but then you lose a lot of, video content, that social virality, side of things with that. Whereas, or I don't want to do Instagram, but if I do Instagram, I hate there could be repercussions there. So what matters most is figuring out which platform or platforms are the best for the business, and then going all in on that stretch. And that's really important. Jim Cramer did that with Twitter, and he's done an amazing job with that. Now, what I would say is he's missing a huge opportunity because, something you and I have discussed at length and is not any sort of, crazy idea, is that short form video content is where the world is going. And that's what everybody wants to be seeing in terms of digesting video.
There, does he?
He's got like 16,000 followers on TikTok, but he's got very little in terms of video content. YouTube, Mad Money doesn't even have a YouTube channel. It's under the CNBC channel. And in terms of shorts, they don't even have not many. I think the only shorts that have over 1 million views are like Tesla or SpaceX launching a rocket or, very, very classical news stories.
Has to be involved one way or another. Yeah.
Yeah. It's basically Elon Musk tracker versus someone on the other side who's done an amazing job with that is Dave Ramsey. Dave Ramsey, who doesn't have the Twitter followers that Jim Cramer does, he's got 700,000 followers on YouTube. He's got 1.6, 1,600 videos, and he's got a bunch of shorts with over 1 million views, including some that have 5.8 million
radio
views.
Guy. Dave Ramsey built his influence originally on radio.
Exactly, and so what he does is he has he posts videos of the 2.5 hour long Dave Ramsey radio shows, and then they cut that up to short form, and his short form content is really good. You may not like the advice he's giving, and there has been, similar to Jim Cramer, there has been this anti-Dave Ramsey sentiment of that he just doesn't understand what's actually going on the street. But the short form that they've done is really, really well done. It's got a beginning, a middle, and it's got something memorable in it, and there's something you can take away from it. And I would recommend everybody to look at that and see how viral he's gone on many of these posts as a way to do it. And it's fascinating to me that Jim Cramer has not chosen to go in that direction. That's leaving a lot of money on the table, a lot of opportunity on the table, because he has Mad Money. So that's easy enough.
He's got all the videos. He's got the raw videos.
Yeah, and having Jim Cramer behind the scenes content, which people love, would be incredible. That would be something that...
I want to go to Jim Cramer and watch him eat breakfast. I mean, I do.
Who wouldn't want to watch that? He would get millions of views probably of people either saying this is great or this is horrible. But regardless, you're going to get eyeball. So he's happy with his lot. He's gotten to where he's been. He's had a long career in finance. He's done what he's done. He's not really willing to go that extra step. He could just hire like an intern.
Social media manager. Go to Upwork. Jim Cramer, if you're listening, go to Upwork.
There you go. Zack,
I think this is an interesting point, and one that I think is there's a little bit of a contradiction there, Josh. So one of the things that made Jim Cramer so good in the beginning is his focus, as you said, right? And now you're saying he has an opportunity to adopt other platforms. And so is that a lack of focus, or is that extending the brand into other platforms? I think he has the opportunity. I agree with you. But, where do you draw that line between staying unifocused on a specific platform, specific messaging, particular form of media versus like branching out and trying to be more things to more people?
First of all, you got to ask him, because it's a question that is curious, and why has it happened? To me, when I think about it and I feel about it, is that he's probably really happy to be holding his, his
BlackBerry.
I wish it was a BlackBerry. I imagine he's holding a BlackBerry. That's when I think about it. I'm not thinking about my iPhone. I'm thinking about a BlackBerry. That's for sure. Which I'm happy we're on the same page of that. And he's just like typing out Twitter messages and loving life, and he doesn't want to deal with. He already's on video enough. Someone can, people don't. Maybe CNBC doesn't want to cut it up. He's like, fine, I'll just do my Twitter. I can do whatever I want. I can post all sorts of crazy things. If there are social media managers who help him with Twitter, I mean, I feel you. That's got to be one crazy job. I mean, I imagine if there's not one, maybe 3 people on 8-hour shifts constantly monitoring.
Jim Cramer, yeah.
It's impossible. And so to me, he's just happy with, he's done the work. He's at the sort of place of complacency from a marketing social media standpoint. And he's like, listen, I don't need to get crazy, but I would love to see it. I think, and everyone would behind the scenes, short form Jim Cramer.
We'll start a movement there. Wall Street Bets. So there's a takeaway that I want to bring up, and I think this is important, and I think it relates to some of the personal story I mentioned about my first job in finance, was that Jim Cramer has a lot of street cred. This was not a guy who came out of obscurity, working in a mailroom, who became all of a sudden this influential guy in finance. Jim Cramer went to Harvard, was editor of the Harvard Crimson, then went to Goldman. He was at Goldman Sachs, right? And then it wasn't until some of those formidable experiences that he left and founded his own hedge fund, Cramer Berkowitz, that he, this was not again, I think it is so important to the brand that he's built, is particularly in finance, where there's trust and sort of camaraderie involved, that he came up through the system. And so he is definitely an insider who's giving the feeling that you're, as I said before, that you're getting access to other insiders. And Josh, this may be sort of the last generation type of influencer, right? Where like we are seeing newer influencers kind of come out of nowhere to build influence.
That's the danger, though. The danger is that a lot of the influencers that are trying to give financial advice have never raised a dollar from anybody, don't understand the responsibility of what it means to try to like give money. You take money from somebody and you want to give it back to them.
There's a credibility issue, I guess, is what you're saying. Yeah.
It's not just credibility. It's you can talk about it, but until you've actually done it, it's something totally different. It's not, it feels different, and it weighs on you. And if it doesn't weigh on you, you have to think about it.
Right? My people.
Yeah, exactly. He says, these are my guys. He's in the trenches with them. And that feeling is very powerful. Now, what we've had now, especially with stuff like Wall Street Bets and Reddit, and especially this is rampant in the Web3 world with cryptocurrencies and launching new coins. People just with no understanding of anything, just shilling and trying to get people to buy their product. Wall Street Bets is a bit different because you do have a movement inside of there. The one that gets, the most noise is what happened with GameStop and the whole idea of trying to turn the tide and turn the tables on, the big boys finance. On finance, which is something totally separate. But on that platform also are people giving, all sorts of, not advice, but, oh, I like this stock, I like that stock. Oh, this person says, I saw on the charts, double doji, shooting star, whatever it is, breakout, cup and handle. Being people are making like they're traders who haven't really done any trading, but read a couple books about and talked to a couple friends about, what it is to be a trader.
LOLing all their way to bankruptcy, right?
Yeah, and it's like there's the fact that he came up and worked at Goldman and understand, and went to Harvard and understand these things, and didn't just work in Goldman. He worked in Goldman at a time where there was like putting in the hours, putting in that time, like really, really, putting in the work during the and having a hedge fund during those, the 80s and the 90s, like that. It's like
heady years, yeah.
Yeah, it's a long time, and I think him having that street cred really gives him a lot of, is what's important. In that, when you are an influencer, or somebody looking at an influencer, it's like, well, does this person have the street cred where I could, be 6 months from now being like, what were we thinking? Or at least, listen, he was wrong, but like, okay, like that happens. People are wrong all the time.
Totally. Another takeaway I want to bring up, and I know this is one that you like to talk about, Josh, and this is like the milieu. Did I say that correctly? The environment that Jim Cramer came up in, because if you look back 2007, 2008, this was the beginning of sort of the trend towards passive investing and ETFs, right? And so all of a sudden, here's a guy who's schwitzing, and he's got his sleeves rolled up. He's staying up all night long because he's researching stocks, and he's pounding the table. He's literally pounding the table. You don't get that type of energy around, a 2X ETF, a gold ETF,
Pro Shares 7 S&P 500 ETF,
Exactly.
Sexiest investment in the world,
He sort of said that, and he appeals to these people who, it's almost like an American blue collar credo of saying, if I do the work and I figure this stuff out, I can beat the system, or I can get ahead.
It's human nature.
Yeah.
I remember when I was a kid with my dad looking at the Wall Street Journal and tracking our stocks, every day. Oh, what was it? There's
Lockheed Martin.
And what?
Lockheed Martin for me.
Amgen. So that was the big ones that we had. I unlike Jim Cramer, we didn't bet against pharmaceutical, back in the day. But
He almost lost his hedge fund on that bet.
no, no big deal. But anyways, not to digress, it's something that people always want to have inside information. This is something that, I got a tip. I think there is a Seinfeld episode, I got a stock tip. It's something that everybody wants to be able to say, I bought this stock, to gloat to friends. I saw this thing in the market and I picked a winner and I did it. And the market, especially when Jim Cramer was launching in 2008, which timing is so important, was going very much in this ETF, direction. And Jim Cramer said, all of a sudden it's talking about picking stocks. And it may be a horrible idea to pick stocks, but let people pick stocks, at least for a portion of their portfolio. And people love it. And even if it's the worst thing it's like smoking, it's like drinking too much, it's like whatever, it's something that may not be good for you, but people are going to do it. And Jim Cramer feeds into that idea of,
and he's giving you the tools of how to do that if you want to do that.
Yeah, of this, you got to research, you got to listen to the analyst calls, you got to look at the market, you got to look at what's possibly going to happen. And I think educating people in that is something that's really important. Now, it could be, I think what's important is that you could listen to Jim Cramer and have him start you on this educational process and then end up disagreeing with all his conclusions because you did you did a different level of education. But I think you'll always still go back to him. That's something that's very different now than it was, I think, in the last generation. Last generation, people were worried to educate because then they would go away and become very independent. Nowadays, there's a with such a close connection, so to speak, with social media. If you feel that somebody has really helped you in the social media world, you'll be loyal to them to a certain extent and keep going back and hearing them, even if you're now someone big as well on your own.
I totally agree with that. And I think that he treats his listeners and his readers, his viewers, as adults, and gives them the tools, the philosophy, the psychology behind what a trader thinks, and then kind of says it's up to you to go do what you need to do. And I like that. It's not protectionist. It's not parentified education. It's sort of saying it's really that bubble, that portal into a trader's life and what they're doing, and caveat emptor, buyer beware. You go do what you want with that information.
Yeah, I mean, 100%. Couldn't agree with you more.
Anything else you'd like to share, Josh? Because I think we're getting near the end of our conversation today.
I think that's about it. I mean, first of all, great to chat with you.
Same here.
Always
I
really,
feel like
really
we could
good.
talk hours on Jim Cramer alone.
I mean, more like we could talk about hours. The one thing we should talk about, for those people who are still here, we talked about it a little bit, but the inverse Jim Cramer. So first of all, there's an inverse.
Tell us about this, Josh.
There is a Twitter feed called Inverse Jim Cramer, which has how many? Like, I get my numbers back up. I think it's like 600,000.
300,000?
It's 300,000. Yeah, 300,000 followers. And there was an ETF that was in versus Jim Cramer at one point. It didn't have enough money at one point, but the fact that people got together and put an ETF in the market.
Research. I've read reports on this at university. No, I'm serious.
It's amazing. I just think about the guy writing the academic report on the inverse pair ETF. It's got to be.
So these are people who have decided that Jim Cramer is not a positive signal for a stock thing, but actually, if you did the opposite of what he did, you would probably do better, right? And so there's research towards this. There was a trading, facility to be able to do this.
It just shows, like, that's, to me, that's the, like we've said many times, that's the epitome of influence. When people are watching you and just saying everything he says is wrong, don't do anything he says, like, that shows that you've made it. And I think Jim Cramer's done an incredible job, working his butt off, becoming that trader, building a hedge fund where it went from $400,000 to $450 million. I mean, that's something like that.
Pretty good.
No easy task. That's like, not many people are able to do that. And then, it went belly up. Many hedge funds go belly up. I'm sure he, people made a lot of money if you go from 400,000 to 450 million. And then he went and parlayed that into becoming an influencer. And 20 years later, he's probably the most well-known financial influencer in the world today. I mean, kudos to him.
So thank you, Jim Cramer.
Thank you, Jim Cramer, for being the first one on the to talk about on the podcast as well. And looking forward to thinking about and deciding on who the next topic we're going to be talking about on this podcast as well.
So that's a wrap on our first episode of Compound Influence. Jim, the OG Cramer, Zack Miller, Josh Liggett here. If you have suggestions about people or influencers you'd like us to sort of deconstruct, send me an email at zack@tearsheet.co and we'll consider it. Josh and I have a whole list, like almost 20 people that we know even today that we want to get to. But we're opening to hearing from you guys as well. Josh, pleasure talking to you again, man.
Zack, always a pleasure, and see you all later.